Good morning. This is Kathy McConnell at West Virginia Senior Legal Aid. I'm sorry I couldn't be with you in person today, but I appreciate the opportunity to be with you virtually, and I will be available for questions if you just contact me. If you email my program, that email comes directly to me, and I would be happy to answer any kind of questions you have about my presentation today. I'm the Executive Director and the Staff Attorney for West Virginia Senior Legal Aid, which is the free civil legal services provider for people age 60 and over in all 55 counties of West Virginia. We only have one office and one attorney, that's me, so we're pretty small, but we are happy to be able to focus all of our attention on older people. I've been with the program since 1996, and that's a picture of me and two of my children, Olivia and Allison. I have a bunch of grandchildren too. I probably should have put a picture of them up. They are awfully cute. Okay, we're going to talk about a few things today. Scams and financial exploitation of older people. Long-term care myths. I think there's a lot of misinformation out there about nursing home issues and nursing home Medicaid in particular. Don't panic, you already have a will. That's about what happens if you die without a will in West Virginia. And the short answer is it probably your estate probably goes exactly the way you want it to. But you should know how it goes so that if it doesn't, you can have a will made that will satisfy your wishes. Fourth, how, if at all, does Obamacare impact Medicare? And then last, a little bit of planning for incapacity. What kinds of documents should an older person consider executing if you're planning for the possibility of incapacity? I think it's easy for people to think about wills to plan for their death, but really it's most important for ourselves if we plan for the possibility of becoming incapacitated. Okay, first topic, current scams. We'll talk about a few. Of course, there are many, many more than this, but the first I want to talk about, commonly called the granny scam, and I've had a few cases of this come into senior legal aid, and I've heard through the grapevine about several other cases. The granny scam starts with a phone call that you get from a person, and it may be a little hard to hear and understand the person, but the person says, "Grandma, it's me," and may say some variation of, I'm traveling and I lost my wallet got stolen and I need some money so I can get back home, or I did something stupid and I got arrested and I just need a little bit of bail money to get out. Please don't tell Mom. Or something like that. Some story that convinces Grandma that she needs to wire money to this person and to not tell other people. And the person, it may be hard to hear and hard to understand, and the person may either know a grandchild's name or may not even know. Sometimes the person just says, "Grandma, it's me, can you hear me?" And she'll say, "Johnny, is that you?" And he'll say, "Yes, it is." Oops, sorry about that. So if you're ever tempted by a call like that, it's not safe. You need to verify and confirm what's happening, and by all means tell somebody. And spread the news around that you've heard about this kind of scam, because I think it's the kind of thing where if you've heard about it in advance, when that phone rings and you hear that, you will instantly be on the alert. You'll recognize it, and your first thought won't be, "Oh, how can I protect my grandchild?" or "How can I help my grandchild?" Your first thought will be, "This doesn't sound right. I think I better check it out." So that's the granny scam. It's a fairly new. I think I've only been hearing about it for maybe a year or a year and a half. Second kind of fraud is sort of related to Affordable Care Act and Obamacare in the sense that scammers will contact seniors and tell them that they're required under Obamacare to sign up for health insurance under the exchange, and will ask them for personal information like your Medicare number. You are not required to sign up for anything pursuant to the Affordable Care Act. Medicare is not handled through the exchange, and there's nothing new to sign up for. Everybody who had Medicare still has Medicare. And those who didn't, once they become eligible, they do not sign up through the healthcare exchange, the new one under Affordable Care Act. They just contact 1-800-MEDICARE. And generally, any person who calls you, no matter where they claim to be from, and asks you for your Medicare number or your Social Security number, there's almost never a reason to give that information. Certainly anybody from Medicare knows all the information they need to know about you already. No one from Medicare will ever call you and ask you for that number. No one from Social Security will ever call you and ask you for your Social Security number. And probably no one from your bank would ever call you and ask you for your numbers either. So I think it's safe for you to just say no. And anytime, if you're wondering though if something might be legit, you can always just say, I'm not going to tell you over the phone. If you need to contact me, please do it by mail. Okay, mortgage bailout scams. We've had a few cases of those also, where people who are behind on their mortgages or are in jeopardy of foreclosure get contacted by some entity or person who claims that you're eligible for some sort of mortgage bailout. You just need to send money to get enrolled in some kind of program. Or that they offer a service where they can get your mortgage refinanced or modified. And you just have to send them money. I had one client who sent $5,000 to some sort of scam of this sort. It was pretty tragic. He's in the process though of litigating that, so hopefully he's gonna come out on the right end of that case. But he was definitely scammed because he was vulnerable, because his mortgage was in jeopardy. He was afraid he was going to lose his home, so he borrowed what he needed to borrow, thinking that he was taking action to solve his problem. So beware of those kind of mortgage scams, which are also usually initiated by phone but could be initiated by mail also. And then last, I want to talk about investment scams generally. There is a really great program called West Virginia Seniors Against Investment Fraud, which is SAIF. There's a website here on our slide that you can check out. Anytime that you are considering any form of investment, you can actually check it out with SAIF, SAIF, because there are a number of different kinds of investment scams, and I think that seniors can be particularly vulnerable for a few reasons. One reason is because they are likely to have something to invest, even if it's not a whole lot. You may have a nest egg or some sort of access to some assets that you may have available to invest. And then I think another reason why seniors are particularly vulnerable is because most of us are thinking, gosh, I thought I'd have more at this point. I thought I'd have more to leave my kids. So I think they may feel some pressure to, sort of take a last chance and try to roll this money into something more. And so I think when they hear about an investment that sounds like a great idea and that sounds like it could really make them some money, they want to do it because they're thinking about their families, they're thinking about their kids and grandkids, and wanting to leave them more. So I think that makes us vulnerable. But anytime you are approached about an investment, be suspicious, be skeptical, and check it out. You can contact SAFE to find out whether it's legit. Okay, those are some of the current scams. There are lots more. I think if you are able to talk to each other when you hear about scams, spreading the information in your community really makes a huge difference, because when you've heard about a type of scam and then you encounter it, you are ready. Much more likely to be able to. The next kind of financial exploitation I want to talk about is sort of corollary to this kind of consumer fraud idea, but it's financial exploitation committed by a person in a position of trust. So for example, a senior may be exploited by a family member, like a grandchild or a child, might be exploited by a niece or a nephew, a friend, even a professional he or she's working with, or a home care worker, somebody from a church or from another local group that you belong to. It's the kind of thing that is hard for people to talk about, because it can be pretty heartbreaking when somebody that you trust takes advantage of you. But shockingly, it happens a tremendous amount in West Virginia. I would say it's probably even more common than consumer fraud against older people. And there are lots of different forms of it, and there are people who sort of insinuate themselves into the lives of older people with the intention of financially exploiting them. But of course there are others who are, your family members. They're born in a place of trust with you that they can take advantage of if they choose to. So for example, I have lots of clients who have co-signed a loan. Let's say they co-signed a loan for their son to get a truck. You should recognize, if you're being asked to co-sign, first of all, that means that the person is not creditworthy. If the person were creditworthy, he could get his own loan. So he's not likely to be able to pay that loan if he's needing your signature as a co-signer. Second, recognize that there's no such thing as sort of a primary and a secondary on co-signing. When you co-sign, you are promising to be responsible for the entire debt, period. Doesn't mean they have to go after the other person. If they go after, the debtor can go at the debtor, being the senior who signs, can be made responsible for the entire amount. The creditors can go after just one person if they choose to, and they will go after the one who's most likely to have something that they can get, which is more likely to be the person who co-signed. So be really careful of that. I have a lot of seniors who've co-signed for student loans for their grandkids. I don't necessarily think that all those grandkids are intentionally exploiting their grandparents, but the result is often that the grandparent becomes responsible when the grandchild cannot pay. There are other people who will purposefully insinuate themselves into the lives of seniors in order to financially exploit them. I had a terrible case of a gentleman who was exploited by a woman he thought was his girlfriend. Turns out she had lots of other older men that she was exploiting also, and the way that she found them was she worked at a flower shop, and she delivered flowers to their wives' funerals. So she knew that they were vulnerable people. It was a horrible case. I've had a terrible case where a woman was exploited by her church. They had a fairly new pastor, and he came to her and said, "We have a family in our church who is about to lose their home to foreclosure, and they really need help, and we know that you have some money in the bank and that you've been generous with the church before, and we're wondering if you'd be willing to lend them money so they can keep from getting foreclosed upon, and then they'll make payments to you each month to pay off the loan." And she asked who it was, and the pastor said, well, we don't want to embarrass, the family by revealing their identity. So she gave him, I think it was almost $30,000, and he said he would give her the payments, and he gave her a couple of payments, and then he disappeared, and she never got her money back. And he was, of course, able to do that because of this position of trust that he was in. So I think it can be very difficult once you've been exploited by somebody you trust and somebody you care about. Very hard to come forward and tell people and admit what's happened and try to get it remediated. So be really careful about that. People if you see somebody new in a senior's life, sort of keep an eye on it. Make sure that senior knows that he or she can talk to you if he or she has any concerns, that you're there to help. Because once you start getting exploited, it can be pretty embarrassing to reveal it. And of course, a lot of seniors don't want to reveal anything that would give their families some kind of ammunition to try to take their rights away. So it's a horrible kind of circumstance, but a lot of seniors will find themselves in it. So please talk to people about it. Take a look at our brochure about financial exploitation committed by people in positions of trust. It's important, I think, to recognize what the signs look like. Let's talk about long-term care myths. I think there are lots of different kind of pieces of the puzzle out there that people believe that are absolutely not true. Or actually, like most myths, there's a little tiny kernel of truth inside of there, but overall they're really not true. For example, a lot of people think Medicare will cover your nursing home costs. It will not. Medicare only covers nursing home costs, very specific short-term stays. They must be in conjunction with a minimum 3-day hospital stay. There are lots of other requirements. It will only cover the first 20 days of that kind of a stay. And then for days 21 through 100, you have a co-payment. I think it's $135 a day now, and it goes up every year. So Medicare does not cover long-term care. It covers a little bit of nursing home care, just incident to hospitals. Like, for example, if you had a stroke and you needed to go to a nursing home for rehab for a few weeks, Medicare could cover a short-term stay if you were discharged from a hospital. It does not cover long-term care. Number 2, nursing home takes your house if your spouse needs care in the nursing home. That's not true either. If you're married and your spouse needs to go to the nursing home, if Medicaid pays that person's bills, which over 75% of nursing home residents in West Virginia have Medicaid paying part of their bill. Now remember, Medicare is the insurance we all pay for through our working lives or through our spouses' working lives, and we are eligible at age 65 or when we become totally disabled. Medicaid is the poverty program, and it's only for people who are medically needy and don't have the resources to pay for their medical care. So nursing home Medicaid is what covers most people's nursing home bills, or part of them. And if you need if your spouse goes to the nursing home, whether your house is in his name, your name, or both names, Medicaid will not, and nursing home will not take that house as long as the spouse is alive and living there. And actually, the nursing home never takes the house. Medicaid, however, can put a lien on your house for the cost of your care, but it never executes on that lien as long as another spouse is still alive and living in the home. So you never have to worry that you will become homeless if your spouse needs nursing home care. 3, and by the way, when I say spouse, I mean legal spouse. And in West Virginia, that means only male-female marriage. We don't have same-sex legal marriage in West Virginia at this time. Also, there's no such thing as common law marriage. A lot of people believe that if you've lived together long enough, or if you've taken the other person's name, or if you've held yourselves out as married, none of that counts. So what I just told you is only for people who are legally married to each other. Another myth, that you can transfer money to your kids or to a trust to qualify for Medicaid. A lot of people think, you can give like $10,000 a year or something safely. First of all, the $10,000 thing is actually a little higher than that, and that's not a Medicaid transfer rule. That is a tax rule that's unrelated to Medicaid. You cannot safely transfer any money to your children without running afoul of the uncompensated transfer of assets penalties for Medicaid. So if you have money, you're anticipating needing to go to the nursing home and have Medicaid help pay, whether you or your spouse, you cannot transfer assets away to your children in order to deplete your assets to qualify for Medicaid. That will run you a penalty if you need care within 5 years of the transfers. That 5 years is called the look-back period. So if you've transferred assets away to your kids, whether you put their name on your deed, given them money, transferred other kinds of assets, if you don't need nursing home care for more than 5 years after that, then you won't have any kind of penalty applying. But nobody has a crystal ball that's clear enough to know whether you're going to need that care within 5 years or not, right? No matter what your current health or circumstances. Well, I guess unless you had a long-term care insurance policy that would cover you for more than 5 years, that might prevent you from needing Medicaid. But at any rate, you can't transfer money to your kids in order to qualify for Medicaid without suffering a penalty. 4. Medicaid will cover assisted living. That is not true either. That's also a myth. Assisted living is sort of a lesser level of care than nursing home. Assisted living facilities can sort of look like nursing homes, but some of them are also just in people's private homes. Some people have 1 or 2 or 3 people living in their home to whom they provide care. The person lives there, and the people who own the home provide meals and take care of the person's needs. But they don't provide any kind of skilled assistance or medical care. So assisted living is like one step lower than nursing home care, and Medicaid does not pay for assisted living. So there's just some myths about long-term care, and if you have questions about long-term care, you are welcome to call us at Senior Legal Aid, and we can talk to you particularly about your own personal circumstances. You already have a will. Hopefully you all have seen our brochure about that, West Virginia Intestate Succession Law. It's a little bit complicated, but the short version is, if you are married at the time of your death, and you're a West Virginian, and you either have no kids at all, or just kids from that marriage, if you die without a will in West Virginia, married with either no kids or just kids from that marriage, then your spouse is your sole heir and inherits everything. If you were either not married at the time of your death, or if you have children from another marriage, then your children will inherit part, and if you still have a spouse living, your spouse would inherit part. But if you have no spouse at all, then just your children would inherit from you equally. So your living children would inherit from you equally if you died without a will and were not married at the time of your death. These are probably the ways that most people would want their estates to go. But of course, when I say married, as I did before, I mean legally married. So this will not work for you if you either are not married to your partner and you want your partner to inherit from you, or if you have certain children that you want to inherit certain things, and that's not uncommon. For example, let's say you have 3 kids, one of your children leaves her home to come back to your home and take care of you when you need help at the end of your life. You may want to leave the house to that child, since she gave up her life elsewhere to come care for you, and the other 2 children to have other things in your estate. If that's the case, you should have a will. A lot of people believe, there's a myth, that if you don't have a will when you die, the state gets your stuff. That is not true. The state only inherits from you in the event if you have no spouse, no descendants, so no kids, no grandkids, no parents, no descendants of your parents, which would be sisters and brothers, nieces and nephews, and on down. No grandparents or descendants of your grandparents, so that would be your aunts and uncles and all your cousins. If not one person is alive, one of those relatives, when you die, then the state would inherit from you. But it is very rare that a person would have not one living relative within that 3rd degree of kinship. So the short version is, you already have a will. It's called the West Virginia Intestate Succession Law. So if you should know what that law would offer you when you die, and if that's not what you want, then you should have a will. But if it is what you want, then don't panic. You don't really need a will. The law will take care of your property the way you want. Does the Affordable Care Act, or some people call it Obamacare, impact Medicare? Yes, but only in a couple of ways, and they don't take anything away, they only add. There is some additional preventive care now that's covered under Medicare because of Obamacare, and it's covered with 100% coverage, no co-payments, which is really nice. And the donut hole in your Medicare Part D prescription plans is being eliminated by Obamacare. By 2020, it will be totally gone. There will be no donut hole. The donut hole is, of course, that coverage gap in your Medicare prescription drug plan, your Part D plan. When you've reached a certain amount of coverage in the year, then your coverage stops. That's what they call the donut hole. It's complicated to explain because it's ridiculous. So I'm thankful that it's being eliminated. But nobody on Medicare needs to go to the exchange website. So nobody needs to pick a different plan. None of that is required under Obamacare. You still have to choose your Medicare Part D plan every year, but that's not related to Obamacare, and it's not new. You will do that the same way that you always have since they created Medicare Part D. So there's very little impact of Obamacare on Medicare, and the only impact really is to increase some benefits. Nothing to worry about. Okay, planning for incapacity. I think most people think, well, I should have a will, I should have a living will, I should have medical power of attorney, and I should have financial power of attorney. I don't think that's really the case. We talked about wills just a little bit. Not everyone needs one. If the law of intestate succession satisfies your needs, then you don't need a will necessarily. Medical power of attorney, that's the document where you choose a person who would make medical decisions for you in the event that you are not capable of making them, and that your doctor has made that determination for you. I think every adult should probably have a medical power of attorney, if for no other reason, because if you need a medical decision to be made and you are not capable of making it, the physician will appoint someone to make your decisions for you anyway. When the physician appoints it, we call it a healthcare surrogate. But when you make the choice in advance, we call it a medical power of attorney. It's basically the same thing, only you get to choose if you do a medical power of attorney. And you should know that that person only ever has authority to make medical decisions for you in the event that you are not capable, and that determination was made by a physician who has personally examined you. And as soon as you regain your capacity to make decisions about your medical care, you get that power back. Now, the other two kinds of documents that people talk about, the living will and the financial power of attorney, I don't think we all necessarily need them. Here's why. Living will, which by the way has a pretty unfortunate name because it's not about living and it's not about a will. A living will is just a very narrow, particular kind of idea. It's a document that says, at the end of your life, you don't want to be kept alive artificially. If it is certain that you are at the end of your life, you don't want to be, plugged in or have your life artificially extended. That's what a living will says. Because, of course, doctors are in the business of keeping you alive and doing all they can to keep you alive. But the living will is the document that gives them the chance, once they know for sure that you are dying, you're telling them, I don't want my life artificially extended. Let me die naturally, once you've determined that that is the case. And you can make particular kinds of decisions in your living will too. You can handwrite in, I do want pain medicine, I do want artificial hydration and nutrition, if those are things you want. Or you could say, I don't want to be put on a ventilator, I don't want to have CPR if my heart stops. You can choose among the different kinds of things that you want or don't want. But it's only about the end of life, and that is all. And you are not choosing a person to make decisions for you in that living will. You are directly telling the doctors what you want and don't want. So if you want to be kept alive at all costs, then you don't need a living will, because that's what the doctors will do. And different people have different reasons for making those kind of choices. You may have a religious reason. You may have some sort of moral or ethical decision. Whatever your choice is, and for whatever reason, it is yours to decide. So if you don't want to be kept alive artificially, you should have a living will. But if you do want to have every chance, if you want the doctors to do everything possible to keep you alive, then you don't need a living will. Financial power of attorney is more like the medical power of attorney in the sense that you're choosing a person to make decisions for you. But the financial's different in the sense that, well, first of all, obviously, because it's about money and property, not medical decisions. But it's also different because when you execute a financial power of attorney, you are not waiting until you are incapable of managing your money. Rather, you are sharing your authority immediately. So that means that if you execute a financial power of attorney and you say in that document that you want someone to have authority to manage your bank accounts, to access your bank accounts, that person can access them right away. It doesn't wait until you are not capable. And so I think a lot of people think it's only for when you're incapacitated, and that is not true, although it can be helpful mostly when you are incapacitated. But it's important to recognize you're sharing the power. That person is your helper. So, and if your initial thought is, oh, but wait, I don't want that person to have any access to my money or property until I'm incapable. If you're having that thought, then I think you should reconsider the person you're choosing. Because if you don't absolutely deeply trust that person to help manage your money and property, then you're choosing the wrong person, because a financial power of attorney is a very abusable document. It's one of the main tools that financial exploiters will use against you. So don't choose a person who is not absolutely trustworthy and quite competent with money and property as well. So we don't all need a financial power of attorney either. Okay, that's all I have for you today. If you have any questions about any of the issues that I've talked about today, or any other kind of civil, legal questions or problems, you are always welcome to contact us. You can contact us by telephone or by email or through the web. And our contact information is on the brochures that you hopefully have as well. So I thank you for your time. And if you would like to get copies of anything for sharing with other seniors that you know, I would be happy to send you copies of anything that you're interested in. Thank you.